Hi there. Thanks for watching the second session on IFRS 8. I wish this session will enhance your knowledge on segment reporting. So let's go to the index part. The entire discussion on this video is divided into 4 sections. The first one is the scoping of IFRS 8. I'll give you a brief over this. So primarily we will discuss to which entities the standards applies, to whom the standards is applicable. We will discuss about the applicability of the standard. Second, we will move into the exemption from preparing segment reports. What are the conditions or which type of entity are not required to prepare segment report? This is basically we are talking about exemption. Even though they are applicable to them, but still they are exempt from preparation of segment report. The third thing we'll discuss on some examples relating to the scope. It's always better to go by the examples. So we'll focus on certain examples which will enhance your knowledge or which will concrete your understanding on IFRS 8 scoping part. The fourth part is the flow chart analysis. Oh my god, flow chart? Sorry, this is not the flow chart we're gonna talk, or which is not the mathematical flowchart and all. Just relax. It will give you a bird eye view on what are the things that is required under the IFRS 8. So this is just a guidance from my side, which I took from the standards guidance, and which will help anyone to understand what are the various process through which the reporting happens, and which or any segment when it meets the criteria, how come the criteria are determined. So this is basically just a gyan session. This is just a bird eye view that I'm gonna give for this analysis. Now let's move into the first section, scope of IFRS 8. Scope of IFRS 8. An entity is required to prepare segment report. In case I have divided the cases into 2 parts. In case of separate financial statements or individual, and in respect of consolidated financial statement. So the crux is if any instrument, that is whether it's a debt or equity instrument being traded in the stock market or any public market, or it's in the process of filing its financial statement with the Security Commission for the purpose of issuing any class, or which means it is in the process of listing. So it is in the process of listing. This is already listed for any debt or equity instruments. For any debt or equity instrument, this is applicable for the parent, and this is applicable in case of separate and individual financial statements. Basically, I just want to tell you one more thing. Separate financial statements are dealt by IAS 27. When we're gonna go through the group accounts in later sections of this entire playlist or the video lectures, then I will tell you what separate financial statement is all about. So do not confuse it with the individual financial statement. It's governed by IAS 27. Now, they gave 2 scenarios, one for normal financials and another one for the parent. Now, the point is consolidated reports is required to be prepared in case where the parent is listed entity. In other words, the required criteria for listing is observed for the parent entity here in the second case. So I just want to tell you that just keep hold of the term called parent because it has some relevance on the later section of this video. Again, I just want to introduce to another concept called public accountability. Now, what do you mean by public accountability? In session 1, we discuss about why do any financial analyst need segment reporting. What's the benefit of segment reporting? Because when we analyze any public company, when we analyze this, we need some information for the purpose of investing. Public companies which are listed, they raised money from the public. They raised money. Here, if one can see it's a debt or an equity instrument, raising money. The concept is if you're raising money, either in case of debt or equity or both, then in such a case you are publicly accountable. And for this purpose, you need to provide more disclosures so that the analyst and the stakeholders would be able to gauge the financial performance of the entity in a better way. So the concept of public accountability has been introduced in the IFRS 8. So which means any entity which is publicly accountable, that is either their debt or the equity instrument or both are listed in any stock exchanges, then in such a case they need to provide the segment reports. We will move into the next slide. Now exemption talk about it's already applicable to the entity, but it is exempt, which means even though they are qualifying the scoping part, but still they don't need to prepare the segment reports. Now I'll go through the example. The criteria is if the financial report contains both the consolidated financial statement, the CFS, of a parent. I told you to hold on the term parent within the meaning of IFRS 8 and a separate financial statement of the parent. In such a case, segment report is required only for the purpose of consolidated financial statement. So my point of view is this. Suppose A Limited, it's a listed entity. It's a listed entity on its own, which means as a parent, it's a listed entity itself, A Limited. And it has B Limited, which are not listed, B Limited, C Limited, and D Limited. They are its subsidiaries. Then in such a case, A Limited's financial report includes both its separate financial statement prepared under IAS 27 and the consolidated financial statement prepared under the IFRS 10. And then in such a case, the exemption says that if we are preparing consolidated financial statement, then in such a case you need to prepare the segment report only for this consolidated financial statement, not for the separate. Because if this condition is not there, then in such a case, A Limited is qualified under both the criterias. See, criteria number 1, that a separate financial statement whose debt and securities is listed in any public market. A Limited securities are listed in the securities market. And case number 2 is in case the consolidated financial statement of a group with a parent whose debt and securities. So debt and securities listed in, which means that in both the cases, A Limited's securities are being traded. Then in such a case, both the conditions will satisfy. And if the exemptions won't be there, then which means they need to prepare consolidated financial statement. They need to prepare segment report for both the separate and for the group, which means A Limited need to provide 2 segment reports if the exemption criteria was not there. Hence, in order to reduce the cumbersome, the IASB has introduced this exemption criteria, which means if the financial report contains the consolidated financial statement of a parent, if the parent is consolidating and they are making it public within the scope of IFRS 8, okay, and separate financial statement of the parent which is included in the financial report, then in such a case the segment report is applicable or required in case only for the consolidated financial statements. That's it, which means only one financial statements has to be there for one segment reporting. One more thing I just want to say that there are many other entities which uses the term called segment information, and they are not complying with IFRS 8. So IFRS 8 is of the opinion that if you are preparing any report and you are using the term segment and which is not complied by IFRS 8, then in such a case it's difficult to say that you are compliant with the IFRS, because IFRS 8 says if you're using the term called segment, you need to comply by the requirements of IFRS 8, which means IFRS 8 has some disclosure requirements. They need to present something, they need to disclose something. So you need to disclose as per IFRS 8 to say that this is a segment information. Else do not use the term called segment in your financial statements. After this, I just want to give you a small example to increase the difficulty. Think about this. Think about A Limited. It's a listed company. It has subsidiary B Limited, not listed company. C Limited, not a listed company but a subsidiary, and it is held by Z Limited, 100% holding, which means this is the ultimate parent, which is also listed. This ultimate parent is getting exemption in the IFRS 8 from the preparation of segment report for its own. But what about A Limited? It's also listed, right? Which also falls within the first criteria, being the listed entity and preparing separate financial statement. So I have a question for you in this scenario. As one more thing, as Z Limited is preparing consolidated financial statement, and this is an intermediary parent, so the main consolidated financial statement are prepared by Z Limited, which also includes this B Limited and C Limited, because A Limited is not preparing any consolidated financial statement because it's exempt under IFRS 8. So there is only one consolidated financial statement, that is for Z Limited, and there are two separate financial statements, one for Z Limited and another one for A Limited. So the question is, how many segment reporting do we need to make to comply by IFRS 8? So how many segment reports are required under the IFRS 8? So this is a question for you. This is homework for you. Just go through this question. I'll post this question in the description below so that you would be able to refer it again, because my handwriting, it's very much bad. So I just want you guys to know that thing, and it's an homework for you guys, and just give you your answers, and the next session we would be discussing on the answer for this question. Now let's move on to the next examples relating to the scope I just discussed. I just told you guys I will provide you some examples. So here we go. Let's go by the first example. Just let me turn on my pen. Okay. XYZ Limited, it's a company whose equity shares are listed on BSE. BSE is basically an exchange. So it met the first criteria. Its equity shares are listed. They need to prepare a segment report. XYZ Limited, though the shares are not listed in any exchange, but the entity has its issued coupon, 8% coupon bearing bond, which is listed on NSE, which means they raised money from the public and which is listed in any exchange. Then in such a case, they need to prepare the segment report. XYZ Limited shares and debt securities are not listed in any exchange and they are not in the process. So then in such a case, no need for segment reporting. XYZ Limited shares are not listed in any stock exchange. Sorry. However, it has filed the prospectus with the SEBI. SEBI is the regulatory body in India for IPO, initial public offering, and received an in-principle approval. The in-principle approval is there. They are filing the financial statements. Yes, it's meeting the first one B and second criteria is B, second requirement, and hence it is required to prepare segment report. XYZ Limited is a parent company whose shares are listed on NASDAQ. Second condition to 1 met, you need to prepare. XYZ Limited is a subsidiary of ABC Limited, which is listed on NASDAQ, though the parent, that is ABC, is not listed in any exchange. Then in such a case, only the first criteria will trigger in respect of the individual financial statement. Individual, it's not separate. Individual financial statements. For ABC, we need to prepare the segment report. And for XYZ. XYZ is a subsidiary. We need to prepare for XYZ the segment report, as ABC is not listed and not required to prepare any segment reporting in this regard. So this is basically some small example to give you a better understanding on the scoping part. And this is the answers. If you want to check. Let's check the ticks. So you can see, well, yes, yes, no, yes, yes, exemption case, and yes, for individual criteria it is met. So this is the thing. Yeah, For point number 5, I just want to say that it's an exemption case, which means for the parent, we don't need to prepare, and for parent, no, but for the console, yes. If it is preparing a console, then in such a case, for console it is there, but for the parent, no, as we have discussed the exemptions from preparing the segment report. The last section is, oh my god, this is the segment report. This diagram looks very daunting, I know. But this is basically provides some guidance, and just go through it. Just download this image and just go through this. This chart I've downloaded from the standard that I took from the guidance on standards provided in the IASB or in the IFRS. This chart indicates some key definitions in the IFRS 8, such as operating segments, reportable segments, and aggregation criteria. This also looked daunting, right? We will discuss in detail in the subsequent lectures again what do you mean by operating segments, reportable segments, because these are some definition that has been provided in the standard. Then we will discuss regarding the aggregation criteria when we aggregate operating segments and the report in the segment reporting. Once you go through the entire course in segment reporting, I promise I'll go through you from this flowchart again and connect all the dots relating to all the requirements or the points that we might have discussed throughout the course. If you have any questions or any query, just shoot on the comments. Just like it, subscribe it, and happy learning, my friends. Thank you. Thanks a lot.